What's going on, everyone? It's Justin, aka JSpit Trades, back with another video. I hope you guys had a good day in the markets. It was a crazy day in the markets, particularly because the CPI data came out and it came in lighter than expected. And this had all sorts of ramifications on the market. Primarily, it triggered rotation out of your high-flying tech names, your large and mega cap leaders, into rate-sensitive names, rate-sensitive areas of the market that benefit from lower interest rates. So talking about small caps, regional banks had a big day, biotech, solar, solid bounce. We also saw nice moves in utilities and real estate, which are bond proxies. So it was an eventful day, to say the least. I actually think IWM outperformed SPY by the biggest margin on record. So definitely an interesting day. So that's why I decided to make this video. And we're going to dig into a lot of things. So we're going to look at how the CPI data affected the macro picture. So how it triggered moves in the US dollar and interest rates. And then we'll take a look at some of the sectors I discussed. So we'll take a look at small caps, biotech. And then I'm also going to share some of my favorite names and way to play this new narrative or new tailwind that we have, and that would be through my favorite small caps and mid caps. So let's just dive right into it. The first thing we're going to look at is the US 10-year Treasury yield. Let me zoom in on the daily so you can see really what happened today. So US 10-year Treasury yield fell about, it fell about 1.7% today, which is a pretty decent move for this asset. And we actually fell at one point today. We were actually trading below those June lows, but we bounced back and we actually held this level. So we'll have to see how it shakes out. I don't think this move in rates or this move in small caps and mid caps was a one-off thing. I think we'll see it continue, but it may take rates going lower. And I think what may potentially happen here is we may hold this level initially. That is if we don't crack tomorrow and just head lower and head down to this range level that I have drawn down here. But if we do bounce, what I would watch is if we come up and tag these moving averages, which are rolling over and sloping down. Maybe we bounce here, maybe we bounce for a couple days, and then the moving averages finally catch up to price, and then we tag that, and then we get rejected, then we ultimately break lower, and that could trigger an even bigger move. Potentially than what we saw today. So that's something to watch out for. So that's the US 10-year Treasury yield. Another way to think about rates is to look at bonds. So here we're looking at the TLT. This is the 20-plus year Treasury bond ETF. This is the bond ETF that most people talk about when they're talking about what's going on in the bond market. And we look at the weekly, we can see that we bottomed back in October, had this big run up. We broke the downtrend that we had been in, and then traded above that for a little bit of time before ultimately cracking and rolling over. But then we fell back into another support level, bounced off that, and then we're able to get back above that primary downtrend level. And then we also broke the shorter-term downtrend that we were in. And now the way this is looking is TLT is looking more and more bottom to me. And if that happens, if bond prices rally, then we'll see even more pressure on rates because the two move inversely. So that's part of the reason why I think rates are headed even lower from here is the picture or what I'm seeing in the TLT chart. Another big ramification from today's CPI print was the move on the dollar. So we can see the dollar sold off hard, and not only did it sell off, but it broke the uptrend that it had been in since December of last year. So this is a big deal. And if this heads lower, if we see the dollar continue to fall from this level, I think that would be a big benefit for not just stocks, but more sensitive speculative names in particular, because the dollar has been rising, pretty much all year. You can see that the big run up it had from December until April, and even as recently as June, it looked like we could potentially head higher. The indexes, so SPY and Q, weren't having an issue with this, but what was having an issue with this was your small caps and other speculative areas of the market. So the fact that this is breaking down, it looks like, is, I think, a big plus, a big tailwind for your more speculative areas of the market. So let's take a look at some of the bigger winners from today's CPI print coming in light. And the first chart we're going to look at is IWM. So this is a Russell 2000 ETF. I think a lot of people have been getting frustrated by IWM, wanting it to move, wanting it to play catch up to SPY and Qs, and it really hasn't done that. But it kind of makes sense why IWM hasn't done as well this year. And you could see we had this initial base, then we broke out of that and came back and rallied into this level here where we got rejected, and then we pulled back. And the reason we got rejected here is there's all this overhead supply, this major distribution pattern from the prior cycle just got in the way. And so when we ran up to that, especially after using up a lot of energy to get there, we got rejected, and then it's took really a few months for us to even get back up and test that level again, which is what's happening now. And I'm not sure we'll break out on the first attempt, or if we pull back and this potentially needs more time. But I think tomorrow will be really telling in that department, because if we get a close above this level here, above the March highs, then we would have the highest close since January of 2022. In my opinion, that would be a pretty bullish signal for small caps and IWM. So that's one way to play an environment of potentially falling interest rates, but it's not the only way to play. And in fact, in my opinion, a superior way to play this trend is to get exposure to mid caps. Mid caps are they're just better companies. They're more proven. They're just more demonstrated, and they've attracted more institutional capital than your small caps. So I just like them for that reason. And you can see when we look at the mid cap ETF, MDY, we can see that this is a much more bullish, much more constructive chart. So unlike IWM, we haven't run up into resistance from the prior cycle. Instead, we've broken out above those prior cycle highs, and then we've just been building out this bull flag at this level. And so this is looking really, really constructive here. Might need another week or two to tighten up before it really gets moving. But I like how MDY is looking here. It looks really, really solid. So that's one way to play it. You could also get more granular and drill down and look at some specific areas of the market that benefit from falling rates. And one of those would be biotech. So this is IBB, the biotech ETF. You could see here that we have had this basing pattern for quite some time, and now we're starting to break out of that. With really authority, we're already up 5.6% on the week, and so we're clearly out of this range. It's not any ifs, ands, or buts about it. This is a definitive breakout here, so this looks really good. We do have some overhead supply to ultimately contend with and challenge, but I don't think we're really there yet. So I think biotech could run for a bit longer before running into some potential resistance, but it definitely is an area of the market to keep an eye on going forward if you want to play this rate trend or play these rate sensitive names. You can also check out regional banks. So you can see here that KRE closed the week up, or it is up 8.4% on the week. And most of that came because of today's big move. So it rallied at 4.2%, and it's breaking out to multi-month highs. It's still kind of in this basing pattern, but it's looking more and more constructive. And I actually think today, one of my buddies pointed out, Larry Thompson, that all of the regional banks, I think there's 142, all of them closed green today. So you just got to admit that these are some of the biggest beneficiaries of falling interest rates. So that's KRE. You can also take a look at solar. So this is the solar ETF TAN, and I know it doesn't look as bullish as some of the other charts we've looked at so far, which are starting to climb out of bases and break out to multi-month highs or multi-year highs even. When we look at TAN, it's just not quite there. So solar stocks during the prior cycle were some of the top performers. You can see this massive run up that we had, and then we built out this flag pattern, got really tight, and then we ultimately broke down to the downside, and we came back down and found support at those pre-COVID highs. And we've just been holding this level. We've tested it a few times, but this is looking more and more bottomed. And with interest rates heading lower, I think this could be one of the areas to benefit the most from falling interest rates. But I think if you're going to want to play solar, TAN is definitely not quite ready, but you could look at some individual names. Next Tracker is one of the stronger names. You can see this name's already up 11% on the week, and starting to put in it had printed another higher low. So it's still looking pretty constructive on a higher time frame. First Solar is another name you could check out. This has been easily the top performing solar name, primarily because they have some commercial business. So that it's not just a residential new homes angle. So I think they're serving some data centers. There's an AI angle to it. So that's why a lot of people and a lot of institutions like them. And when we flip it over to the monthly, you can see why this chart is or setup is attractive. So we had this breakout to all-time highs. We pulled back, but we never closed below those April 2023 highs, those March 2023 highs. Instead, what we've done is held this level, and now we're up 3.5% on the week, on the month. And then today, it showed a little bit of strength. It closed the day up 2.4%. Not as strong as some other areas of the market, which had big run-ups. But a lot of those other areas that saw really, really dramatic run-ups haven't been working at all, really. So what those stocks and those groups really need low interest rates to get going. And while low interest rates would be a beneficiary to name like Nextracker and First Solar, those names have already proven that they can work and higher rate environments. So if rates do come down a little bit, it's just an added bonus. But these names are higher quality than some of the names that are just seeing signs of life because rates are coming down. So that would be one group to keep an eye on. As far as some individual stocks, I'm going to start with the mid caps. So let's look at Instacart. This ticker is CART. Technically, the name of this company is Maple Bear. I don't know why they call themselves that. They should call themselves Instacart. It's pretty stupid, but that's just my 2 cents. But I really like how this chart's setting up. You can see it's a recent IPO. It's a $9 billion market cap, and just kind of fell out of bed right when it went public. But it built out this initial base over several months. Then we had this nice rally. Then after that, topped out. We pulled back and we came back down and we tested this level here, and we bounced off that. And now we're starting to attack or challenge the uptrend that we've been in, or the downtrend that we've been in since April. And I think if we get a breakout over this level, this could really get going, like how this is setting up a lot. And this name showed a ton of strength today. So while a lot of tech names, a lot of larger cap growth names got hit hard, this still closed the day up 3.7%. So there's, someone likes this name and thinks it has some potential, in my opinion. Reddit is another recent IPO that I would keep an eye on. And this name has also shown some good strength lately. You can see we recently broke out to all-time highs. And then, we had a few days of distribution. We came back down and we tested this level, which dates back to March of this year. And that's so far holding. We closed today up 1.3%. And we closed above the rising 10-day moving average. I think if you slap on the 21-day, we're also well above that. We haven't challenged that yet. So this is strong. It didn't even come back down to the 21-day yet. It's instead stopped falling at the support level. So to me, that's a big plus. And, the fact that it didn't even get below the rising 10-day moving average tells me that there's some institutional demand for this company. And this is an $11.5 billion market cap company, but it also has a 28% short interest. And I just think CART and Reddit could have potential in this environment. I think the reason they were green today is because IPOs, especially these more recent IPOs, these companies haven't been public that long. They're viewed as more speculative assets. They're just not as proven as your Microsofts and your Apples of the world. And so when rates fall, these names tend to you see a lot of flows and get a lot more attention. So I think that's the reason these names stood out and showed relative strength today. So those are my big caps. Let's get to some smaller names. So this is PI Ingping. I don't know how to say that. It's a IoT company, and I really like how this name's setting up. You can see we recently broke out to new all-time highs, and we had a pullback, came back down, tested these 2023 highs, flipped that into the support, and now we're starting to show a lot of strength. We're back above the 10-week moving average, and we look at the daily. You can see how strong this is. After bottoming here, it's just been steadily climbing higher, and we sort of had a pullback into this rising 10-day. It didn't look like we quite got there. It got front run a little bit. But today, this closed up 3.1%. So I think this name is looking super, super solid. That's PI, and they have a $4.6 billion market cap. Modine Manufacturing is another name I would keep a super close eye on. So this is an industrial name. I think they do some data center stuff. I remember looking at their website and looking through their recent earnings transcripts and earnings presentations, and they really focus they paid a lot of attention and drew a lot of attention to the fact that they're moving and pivoting, and a lot of their business, a lot of their what's really driving their growth right now is their exposure to data centers. I think they sell some cooling equipment similar to what VRT does, but this is a super strong stock. I think it's up over 200% over the past year, so it's definitely a winner. And you can see how it's just been trading for over the past few months, building out this really, really beautiful base, starting to break out of it. This name looks really, really solid in my opinion. Today we closed up 3.5%. And this is after coming up and trying to break out a few days ago. And then we pulled back down in the rising 10-day moving average. That caught, didn't even dip below it. And now this is setting up. This name looks really, really good in my opinion. I also like DY, Dycom Industries, ticker DY. This name looks really, really good. On the weekly, you can see that after breaking out of this base, it just has been on an absolute tear and just been riding this trend line for quite some time here. We tested it here, got close to testing it here. I didn't quite get down there. Tested it here though, and then just traded and found support at this level, and then eventually rocketed off of it. And it looks like the same thing's playing out now. We pulled back into it, and it's held a support for a few weeks in a row, and now we're starting to bounce off of it. So this name looks really, really solid. You can see on the daily here how it's holding up. And not only do we have that trend line there, but we have a lot of moving averages, coming up and starting to catch up with price and starting to act as support here. So the 21 and the 10-day are right there. So I like how this name's shaping up a lot. ZETA Holdings, this name looks really, really good. You can see it broke out of this base here, had this nice run up, and then we pulled back down into the rising 10-week moving average. That acted as support. Then we tried to break out last week. We couldn't quite do it on the first attempt, and now we pulled back into the rising 10-week moving average, and you can see the dips were bought off that level. And so this name's setting up really, really nicely on both the daily and weekly. And I like how this name is just showing a ton of strength. It's proven to be a winner. It's not a stock that needs low rates to do well, but if rates fall, I think it'll benefit this name, as we'll see a lot more attention paid to small cap names. So ZETA Holdings, and before I sign off on this one, it is a $3.8 billion software company. I think they help out with marketing or something along those lines, but definitely a really, really nice setup. Kendall Holdings, this is an IT company. They are a $6 billion company, and I like them on the weekly a lot. We had this big base we broke out of, had this nice run up, came back down, flipped this level into support, and then we rocketed off that level. And now what we're doing is this trend line that dates back to May of 2022. That's acting as support, and you can see how it's held several weeks in a row, and the rising 10-week moving average has caught up to price. So this name is looking really, really solid. And one of the things I really like about this chart is that, unlike some of the other charts we've looked at today, which still have some overhead supply to cut through, this name really doesn't. So yes, we do have some price memory up here, but it didn't trade at these levels long. It basically went public and just went to free fall. So there's not a lot of price memory here. So I do think if this picks up steam and gains some momentum, it could make a big run. And the levels I marked on this chart are 35 and around 40 or 41, and we're trading at $26 now. So potentially a ton of upside on this name. LMB, Limback Holdings, I like how this name's setting up quite a bit. This has been one of the stronger names this bull market. This name bottomed back in the summer of 2022 and rallied up 1,000% off its lows. And it's just been one of the best performing stocks. And this is a $600 billion industrial company. I think they do plumbing. So I think the sort of narrative or megatrend they're riding is a reshoring. They may do something with data centers. I'm not quite sure, but I think it's more manufacturing. But nonetheless, this is an awesome chart. I've shared this on Twitter before. Just love how this broke out to new all-time highs after taking out those March highs. And we came back down, flipped this level, and the rising 10-week moving average is coming up and acting as support. And when I zoom in here, you can see just like how nice of a chart this is. This stock closed the day up, I think, about 6%. Check really quick. So this name looks really, really good. You think it's just starting to break out of this base that it's been in since May of this year. So really looks good. Benchmark Electronics, really like how this name's setting up. This is I think a $1 billion $1.4 billion electrical equipment company. So they may have some AI angle or data center angle. I'm not really sure, but we've seen a lot of these electrical equipment companies do quite well. So I think some of them are helping with the out with the AI buildup. But the reason I like this name is one, it's strong. We broke out of a big old base recently, and then had this big run up, and then you could see what's happened the past few days, past few sessions, is we just pulled back, and the rate at which we're falling is really starting to ease off, and now we're starting to trade sideways at the same time that the moving averages catch up to it. So you got the 50, 21, and 10-day right there coming up to act as support. So I really like how this name's setting up. That's BHE. And last name I want to cover is American Superconductor Corporation. I think this is a semi with some AI and I think even some quantum computing exposure. So you don't find too many stocks with that kind of angle or narrative attached to it. But I think this name does. And really, really strong name. I think it's a $1 billion market cap, but it's just been on an absolute tear lately. This was trading at $3 back in December of 2022, and now we're trading at almost 30. So big run up, really strong stock. The strength is off the charts, and it's got potentially two really hot narratives attached to it, AI and the quantum computing thing. But my reservation with this name is that we are bumping up into some resistance here, so we'll have to see how that handles. We did have a slight pullback a few weeks ago that was handled really well, and just we didn't see much of a drawdown. So I do think there is some interest in this name. There's a lot of appetite to own this name. But we are at some resistance here, so that's something to keep in mind. But I would definitely keep this name on your radar because it's shown a ton of strength. But yeah, that's it for today's video. I hope you guys found it informative. And I'll do another video soon, maybe over the weekend, where I look at some names that are more of your junk stock variety. If people like to trade options or short-term swings on these really beaten down stocks that can really fly when the environment turns risk on because of something like falling interest rates. So I'll make another video for that. But if you like the content, be sure to give it a like, comment, and let me know anything you want to see. And also subscribe if you enjoy what you're seeing. All right, that's it for today.